Welcome to True Print for Life. I am your co-host, Maylin Sambois.
And I'm your host, Christina Vera. Welcome back for another exciting, very, very excited about this episode. We have another guest speaker with us today. And as you know, we really get excited when we're able to bring dynamic individuals, not only just from our community, but individuals who are doing amazing things throughout the United States and in different countries. And today we are excited to welcome our guest co-host, Itzia Johson. Itzia is a community home lending advisor. She does also a lot of community service stuff. She actually serves on our nonprofit board at Femergy as our treasurer. And she's also an entrepreneur. And so, Itzia, we're super excited to have you today. Just knowing what we know about you and your passion for financial literacy, community advocacy work. I mean, you really, really do a lot with making sure that the community is informed, that they understand what their options are. And today we're excited because, you know, on True Print for Life, we're always talking about economic power. Like, how do you build? If you're trying to start a business, if you're trying to buy a house, if you're just trying to create and maintain economic self-sufficiency, that is a key thing that a lot of communities, unfortunately, maybe sometimes don't learn until a later age, or some people never learn it. And so, Itzia, we're really excited just to talk to you today about your journey and then really dive into some best practices. So if you don't mind just introducing yourself to our listeners.
Sure. Thank you so much. I am so happy to be here today with Maylin and Christina. My name is Itzia Johson, and I am from Panama, born and raised. But honestly, I've been in the United States, in Ohio, for over 40 years. So needless to say, I'm really a Buckeye now. So,
Good.
So yes, I am a Buckeye, Panamanian Buckeye. And so I'm a mother, so a grandmother of 3 beautiful grandkids. So yes, I'm just honored to be here with you ladies.
We're excited to have you. And so, I mean, I can only imagine. So you've been in Ohio in the United States for 40 years. What was it like growing up in Panama?
Oh, wow. It was amazing. The culture is different. Your next door neighbor is family. We had a lot of outdoors events. We did quite a bit. Our Christmas was different because, of course, it's no snow. So we able to be outside and it just being in the outdoors. That's what I enjoy living in Panama.
How was it like coming from Panama here? How was that transition for you?
It was a culture shock. I didn't think, honestly, that I was going to stay here in Ohio. But, of course, my mother and my brothers, they're here. So I was like, oh, my God, it's cold. Am I really going to like it here? But eventually, by having that support of my family, I felt comfortable in staying here in Ohio because, honestly, Columbus has been good to me. I cannot say anything bad about not staying here. But it was shocking, just the whole culture. But I got used to it. And like I said, now I'm a Buckeye, and I enjoy being in here.
That's awesome. What was your biggest revelation coming to the U.S. from Panama, right? Because I think I'm from Dominican. So when you come from there, people sell you the stars. And then you get here, you're like, I don't see money in the streets like you said I was going to find.
Yes, that's absolutely right. Because people always think like, well, you go to the United States, you're gonna have money because the whole financial situation is different. But what I have learned was USA is about credit. So in Panama, it's different. Like if you know somebody, you say, okay, can I just borrow money? I'll pay you later, and they just write it down on a notebook. And then you come back and pay. You may pay a little bit of interest. But here in the United States was like, is you better have good credit. You don't have any money, it's better, but having better credit is much better. Because with the credit, you can buy whatever you want. So that was kind of like, oh, wow. So this is the way things operate in America. It's not like what we thought, coming like, okay, it's going to be all fancy and we will be able to get a good job. But no, you have to work hard. You have to work 2-3 jobs to be able to afford the things that you want. So it's not what people think. Actually, I think that coming from the island, we have more freedom because we can do so much more. We're not so caught up on status, caught up on making that money, grinding every day, chasing that cheese. It's more like let's just go to the beach, and we're just happy just to go to the beach every day.
Take me to the island.
Just taking some mangoes and some coconut fun and just having a good old time. But here, that is the different culture that I experience in the financial, how things work here in America with credit.
And I noticed that you're very passionate about credit, and I can see a little bit why now.
I know.
And how much you take it upon yourself to really teach others about credit. That like many of us come in here never heard the word credit, and a lot of people still don't understand really how credit works. Right? Like, how does it work? How do you get it started? And if you mess it up because you didn't know, how do you fix it now? Right? Like I said, it's never too late, but how do you start to? So my first question would be, how do you start building a credit when you just came to this country and you have no idea how to start that?
Yeah, it is very difficult. I will say for me, it's always about if you have a parent. I will say as a parent, what I did for my kids was, as soon as when they were at age of 18, I add them into my accounts. That way they will be able to have credit, because when I came, I had no idea. I'm like, okay, so what am I going to do now? I want to buy a car. Thankful enough, it was a lady by the name of Luisa. And Luisa she was so nice to me. She's like, I really, really like you, really love you. So what I'm going to do for you, I'm going to co-sign for your first car, because I couldn't get a car because I didn't have any credit. And that's how I developed my credit. And I was like, okay. So she said, now that you have this credit with your car, I start paying on time and everything. And then from there, I applied for credit cards. And that's how I established my credit. But at the end of the day, I think that knowing what I know now, the best practice will be, if you as an adult have kids coming up, just have them added into your credit cards. That way they can start acquiring credit and not get in situations that then later on they're going to have too much of credit and get themselves in trouble, because now they're authorized users. So you have control of that credit card, right? Because when they go to college, back in the days, we remember you go to college, everybody wants to give you a credit card, and you don't know better. So you're like, okay, yeah, I want that T-shirt. So
Or that dollar
I want
toy.
that pen,
Yes.
or I want whatever. And then there you go. And then you start establishing that credit, but then you don't use it wisely. And when you see, you're like, oh my God, I'm in this situation with all this, credit cards and student loans and things like that. But to go back to that, I think the best practices start that way. If somebody gives you an opportunity to add you into a credit card or to co-sign for you, make sure that you do well with that credit. And then that way you can establish. Now they have secure credit card. When I was coming up, they didn't have secure credit cards. So that's one of the best way to establish when you're coming from another country or just being young. Take that $300 and open a secure credit card. And then from there, treat that secure credit card like gold, and then make those payments on time. Don't go over your credit. If you think that you're going to miss the payment, then call that credit card company, call that financial institution. And that way they know, okay, let me put you on a payment plan, and you don't ruin your credit.
That is wonderful.
What's the rule of thumb, Itzia, like in terms of like a credit card, for example? What's the percentage ratio? Like you shouldn't spend more than this, because sometimes that's also the challenging part. Like companies are like, give you $10,000 and you're like, cool, I can spend $10,000. But as soon as you go past a certain threshold, then you might get that notification from Experian, like, your points just went down, but I have $10,000.
Right.
So I think the education piece, to your point, it's just like, it's not something we grew up with. It's not something we talk about enough as young people or even children. So really understanding the power behind having credit and how to utilize it in a responsible way that's actually going to help you build that credit. So can you speak a little bit to like what's the best rule of thumb for like percentage wise?
Well, 30%, between 35% of your balance, you should have available at least 35% of that. Don't go over the limit, because soon when you go over the limit, like Christina mentioned, it's going to hurt your credit score. It's going to go down quite a bit. So you always want to make sure that about 35% available credit that you have. So that way it will not impact your usage. Because 35% of your score goes by your payment history. So that's a big, huge 35%. So you want to make sure that you're making those payments on time, you're using it wisely, you having that 35% threshold that you're not going over, so you can maintain that 700 or 650 score, whatever you have.
So don't use the full balance.
Don't use the full balance,
Yeah.
and please don't go over the limit, because that's worse.
That's when they're like, we're going to cut your credit card even though we gave it to you.
Yes.
That's what a trick, I feel
Yes.
sometimes. So building a credit card. So what is the, let's say, good score, right? So if you are looking at your credit right now, this is the first time you hear about these things. What is a good number for a credit score?
660.
Okay.
660 is what we look for. And we talked about lending when you're talking about buying a home. Because the thing with credit is that the score is used differently in different situation what you're purchasing. So the same credit score that you use for lending is not going to be the same credit score for a credit card or for a car loan, because sometimes some financial institution only use one score. That one score could be a 700. But if you look at credit, we have 3 scores, right? So we have Experience, we have Equifax, and TransUnion. So we take your middle score when we're talking about lending, which is considered your FICO score. So you want that middle score to be around 660. That way you can qualify for what we call either a conventional loan, which is, or an FHA loan, then you can go to a 620. But you always want to have at least that 660, and that's just not for purchasing purpose, but what happened with insurance. They look at that. Even jobs now, they look at your credit. So you want to make sure that you're keeping your credit, always monitor your credit. I know that we used a lot of the Credit Karma, and people say, well, I use Credit Karma. And then when you pull my credit, it's lower. It's much lower. Yes, because Credit Karma and all of the tools that are out available, it's really just a tool, right? Just to let us know how you're doing with your credit. The score is always going to be off, because as a lending institution, we use, like I said, those 3 score. And it's a formula that nobody really knows what it is. So that is the best practice.
So 650. I thought it was like 720. So that's good to know. 660, guys.
Yeah, at least a 660. And that gives people hope.
Yes.
Because a lot of people say like, oh my gosh, I can buy a house because my credit is only a 620. You still can buy a house with a 620, just you're not going to have the best interest rate. So the 660 will put you in a better position of getting a better interest rate.
What if your credit is not good, and I hear a lot of advertising about these companies that you come to them and they fix your credit and they help you make a payment plan, and some of them are scams or some of them you don't know if it's true. So if you are looking at your credit and it's below the 660 right now, it's not good, and you don't know why it's not good, or you want to fix it, you want to get better. Like, what are some places or tools they can use for that?
Well, like we were saying, the Credit Karma tells you it's a good tool because it tells you that if you pay this off, this is going to increase. If you, do whatever open a new credit card, things like that. It may help. So, but I always felt that going to a nonprofit organization, and the reason why I state that is because myself, I used to be a housing counselor for many, many years, and I helped so many people with their credit. And I feel that when you go to a Homeport, Columbus Urban League, OSU Extension, all those nonprofits that are out here, that's a free service. So why pay for something that you can get for free? And they're going to guide you. You're going to have a one-on-one. I'm not saying that those financial institutions that claim to be credit repair are bad, but some of them are, you know. What they do is just send a letter saying, I'm disputing all of this. So you're disputing everything, really, but it belongs to you. So matter of time, that dispute is going to be investigated. Everything that you disputed is going to come right back into your credit. So now when we're ready to pull your credit, it's going to be there. So mean that your score is going to be probably worse than what it was. So you want to make sure that if you are working with a credit repair agency that is reputable, that they're not just taking your money, because if you think about it, if you paying, we'll say $250 a month, you can take that $250 and just pay towards the credit cards that you're behind and do your own, credit repair. The thing is about having time. If you have the time to invest in yourself and take that time and just work on your credit, you can do it yourself instead of paying. But like I said, if you don't have that ability to do it, go to a nonprofit organization.
That's great.
That's good advice. Mm-hmm. Thank you for that.
Yeah. Yes. And I think it's just so helpful to know that, like, even if you do have bad credit, that there is hope to change it around. And I know that firsthand because I was one of those people that did not understand credit. I remember being very young, applying for credit cards, eventually got into a car loan that at the time I could afford it. Like I really could, but then I made some choices that were not so good and ended up losing that car. And that hit my credit in such a way that it took years to really rebuild. But you rebuild, right? You mentioned earlier, secured credit card, really owning your debt, looking at your report, because I just wanted to hide from it. I'm like, maybe it'll go away.
Actually, it doesn't go away.
Yes, it does not go
They'll
away.
lose track, and then it'll all go away. And it was like, no, at some point, right, if we want to build and we want to continue to move forward, and you mentioned even employers, but I remember a job one time, I got the job, and they was like, yeah, we just got to do a background check, and we got to put, we got to do it. We do a credit check, and I was like, I'm not going to get this job. I panicked so bad when I heard about the credit check, and I was like, oh my gosh. And funny enough, I didn't get that job, but I didn't know if it had to do with my credit or what happened. But it was just, I got to a place where I'm like, okay, Christina, like, you can't live like this. Like, you have to own your credit. You have to own your finances. And I think it's such a, just when you don't grow up really understanding finances, how bills are paid, how do you create a budget? I mean, there was I don't ever remember having conversations about budget. I just knew like either we had the money or we didn't have the money.
And usually we didn't.
Yeah, and we usually didn't have the money.
Yeah, when we grew up poor, it's like, okay.
You're always on this survival mode of spending. It's like, okay, I'm going to, buy these things right now because I need them before the account is overdrawn.
Right.
And then you're constantly playing this, like, what do they say? Rob Peter to pay Paul.
Yes.
And then, so to get to a place of just really understanding your credit, understanding your finances. And I think budgeting is so key right now because now that you can get credit, I think sometimes that can be a trap if you are not responsible of really understanding like how much money can I afford just because they approve you for a $500,000 house. Can you really afford a $500,000 house and be able to still maintain the lifestyle that you're accustomed to? Like, if something happened to that job you had, do you have money saved to be able to handle maybe 3 to 5 months with no employment?
Exactly.
So I think it's important that, we look at our budget and our finances from a realistic standpoint of what we need, not always what we want. And being willing to be saying like, okay, this is maybe something I do in 3 years, 5 years. Now, Itzia, you've seen the housing market from all different perspectives. And, I think many of us have watched, where we had that housing crisis back in the early 2000s. Now we're seeing one of the highest real estate market values I think we have seen in a really long time. I've noticed rates are also starting to go up.
Exactly.
And I've even seen some larger mortgage companies starting to lay off a lot of officers just because they did a mass hiring, I think, during that refinance wave. So what are your thoughts on just like for people who are really trying to gauge like what's the right time? Like when is it right time to really evaluate purchasing? Is it better to hold out? How do you gauge if you're really in a financial situation that you can afford some of just like the cost of living now?
Absolutely. That is a good one, Christina, because right now it's crazy. It's a crazy market. I remember I was in the 2007, 2008 when all of this happened, when we had the foreclosures. It was a nightmare. At that time, I was a housing counselor, so I did a lot of foreclosure counseling, a lot of loan modification, trying to save people's home. We had the Save the Dream program, so, that helped a lot. Now looking forward, now 2022, 2021 also, it's been crazy. Interest rates going up. One thing I will say to everyone listening, go with your budget. Like Christina mentioned, go with your budget. Your timing. It doesn't matter if someone's give you the $500,000 or $300,000 pre-approval letter. You have to look at your financial situation. You know how much you pay for daycare. You know how much you want to travel. Did you want to just live paycheck to paycheck and just make a mortgage payment? What do you want to do? Did you want to deplete your 401k to buy that home? Because what I'm seeing right now is everything is going over asking price. So if the house is $200,000, the buyers are doing $20,000, $30,000, even $50,000, paying additional towards the seller's closing costs, and they depleting everything that they have. Another thing that's hurting this market is a lot of investors. Investors are coming in from California, from other states, and buying our inventory. So it's very competitive, and they're coming with cash. So someone that had put an offer for $250, someone come with cash $260, they're going to get that offer. So the market is not friendly buyer right now. It's for the sellers. So the sellers are really taking advantage of what it is. I have some people that have done loans in the past that their house now, the equity is there. They're moving into apartments and they're selling their property, getting a profit of $150,000. But the thing is that you have to think of, okay, you move into an apartment paying $1,700 a month.
Right.
Is it really
worth it?
Worth it?
Because where are you going to move to?
Where are you going to move?
That was the biggest thing with us. Like, we want to move, but I'm like, do I want to move that? Like, I want to move. That God willing, that will happen one day. But then, because we get calls all the time, like, can we buy your house? And I was like, I don't have nowhere to go.
Where am I going?
You can't buy my house.
Stop calling me.
Yeah, because to your point, you're paying $1,700 a month in rent. And I mean, I was reading an article that people say, like, a lot of investors, they really also, there's this not new, but a lot of conversation around this whole Airbnb world. That Airbnb has really drove rental costs and home purchase costs because you have a lot of investors buying these properties, leasing these apartments for short-term rentals where they can capitalize a certain amount of money per day. And it's leaving the everyday family member or the everyday young professional or, person out there who just needs an apartment, who just needs a house just to live in. They're not looking to make a bottom line. So you're up against big investors, you're up against large corporations. And And, it is really driving cost of living, not only here in Central Ohio, but around the world, especially here in the U.S. And so I appreciate you saying that, really looking at your budget and being responsible with what you really can afford and not what we think we want based on what we see online. Because I know I have to have that conversation with myself. I'm not telling you this because I have mastered it, because I'm like, 500,000, how much is that? And I was like, no, Christina, you can't. Because then it's like, to have the home I want, but then I can't live the life I want. Is it worth it?
Exactly.
Is it
Do
worth
you want
it?
peace of mind?
Right.
Do you want to be able to wake up every morning and say, okay, I'm happy.
Yeah.
I can make my
With no mortgage.
I still can go on vacation. I can take care of my kids and
Get
do what
my
I
hair
need to
done.
do. Yes.
Right. Your eyes, your whole life.
Your whole life. Right,
Yeah.
Absolutely. So that, it just hurts my heart because yes, I am very passionate what I do. I love what I do. And it just makes me so sad because it's no affordable homes.
Yeah.
So people of color, with gentrification too, you mentioned that, people being pushed out of their homes.
Yeah.
And
But
nowhere
everything
to
is a
go.
cycle, right? Like I feel
Yes,
like in
it
the
is.
banking industry for my years there, I always saw the cycle. So when something
It
was
is.
up, I never really like held on to it or freaked out
Mm-hmm.
because I knew it was coming back down eventually. I don't know when, 2 to 3 years. So we saw what happened in 2008. I had just built a house at that time here.
Mm-hmm.
So I know exactly what happened. And then you go into now, we're having these crazy markets, but eventually we're going to come back down. So
It
it's
is.
like, can we just
It
all
is.
chill for a
Well,
second?
a financial advisor told me he doesn't think it's going to go back down. What he said was he doesn't think that appraisals would be the way that
That's what it is,
He
the
said,
appraisal.
he's like, that day of, getting a $50,000 house, $100,000 house is gone. But he did say the kind of the
too much
fluff, the inflation of a home that we know is worth 200,000 being appraised for 250, 260. He thinks we're going to find more where appraisers are going to start, or they have already started.
It's already
doing
started.
it what is
Yeah.
value,
It's
right?
already
Like
going at the true value.
Yeah.
So that's the reason why people are putting over, the appraised value.
Yeah, which is
And
crazy.
Way over the appraised value.
Yeah,
Yeah.
I've seen it. I'm like,
So
no.
So, and the thing is that, you're doing all of this now, but when the market starts to balance, you better make sure that you want to be in that house for 20, 30 years because you're not going to be able to sell it
Right.
And get a
and
profit.
get that profit. So you're going to be stuck in that property for a while. So that's why I tell my clients, like, look, just think about where do you want to be in the next 5 to 10 years. If you're overpricing, you over purchasing, and the value isn't there already, so you're already upside down. So you're planning to live in that property for the next 15, 20 years or whenever the markets balance out, then that's fine. But if you're thinking about moving the next few years, it's not worth you doing that. But at the end of the day, I feel everybody has to make their own decisions. We're just here for advice and make sure that, at the end of the day, it's like, what do you want? Do you want peace of mind? Do you want to have some savings? Or did you just want to live paycheck to paycheck? So pros and cons, right? So
That's your decision, guys. We're not telling you what to do here. However, I keep hearing the word budget, which I dislike budgets because it just seems so restrictive. But I know from all the classes that they give you a lot of freedom. So one of the advice I think you can take from today is to make sure that you create a budget. If you don't have one, it doesn't have to be super restrictive or super complicated. Just figure out what you're coming in and what's coming out, and then what amount you have for savings and planning for a purchase or for rainy days, like I like to call them. But yeah, definitely looking into a budget is going to be helpful for everyone listening.
3 to 6 months is what we state, that you should have at least 3 to 6 months of funds available for things that emergency and things like that can happen, because we don't know what can happen. We see what happened with COVID, right?
Yes.
And a lot of people was out without a job. So we got to prepare herself and not overspend and just start saving. And I'm telling you, it is hard to save, but when you start saving, and I get passionate about it because I do it. And then when you see that your savings account going up and you see that you don't want to touch it, you get so like, I really don't want to touch this additional $1,000 I have. Let me find another way to buy what I need to buy and not to spend my savings.
You become very creative.
Yes, because you become obsessed with looking at that number. I know I am.
Yeah.
For me, I'm like, oh, I don't want to touch that. I really don't want to touch it. And then I'll do something else. Like, okay, well, let me get a second job or let me do something else. I'm always be creative about that. Entrepreneurship. Like, okay, where else can I have other funds available? Because we always say you need to have at least 7 strings of funds, right? So I have about 3.
Okay, that's good.
And I think that we all should do that, because in that way you're just not depending on that 9 to 5 job. Because I am a 8 to 5, right? But at the same time, I have my additional side jobs that I do, and in that way, if something ever happened, I feel like I am a true believer that God has blessed me and He will continue to bless me. But at the same time, you got to be wise, right? You just do other things that you can have sufficient income that you don't feel trapped. You still have that freedom.
And your side jobs are things that you enjoy.
Exactly.
Yeah.
That's to buy my shoes and my clothes.
Yeah.
Note to self, get a side job.
Right.
Don't touch the savings.
Leave it alone. Leave it alone. Well, Itzia, thank you so much for being here today. I feel like we could talk to you. There's probably so much more extra layers to this. So we'll probably have you back in the near future just to talk about, maybe we'll do a budget segment on like best practices to how do you really evaluate your budget. Because I think the credit piece is one piece, but that budgeting piece, I think, is also huge. And how do you create that economic self-sufficiency that we're often talking about? So we really thank you for being here today. And thank you for the work that you're doing, and not just providing services, but you're educating the community on these services and really guiding them to pick what makes sense for their households.
Absolutely. And I need to go back on something that you said, that you will run from your debt, or you will you don't want to open it, right? One piece of advice: always open your mail, regardless who you owe. Open that mail, because guess what? If something was in collection, right, then you did not open that mail. Now you got a judgment. You didn't show up. Guess what? That judgment's been granted.
So open your mail.
Open your mail.
I need to open my mail.
I was gonna ask what advice you would give people. I'm like, that's a good one.
Open your mail. It's so true. I have so much mail I don't open. I'm like, oh, I know what that is. Just throw it away. Just throw it. No, I'm saying, don't be like me, guys. Be better.
Yes, open that mail.
Yes. Well, Itzia, we always close our shows here with a saying, which is really kind of reflective of what we want our listeners to also take away. So it's bigger than you is our kind of like our company culture. And so what we would like to do before we close out is just together say it's bigger than you.
Okay.
It's bigger than you.
Thank you so much for listening today. We're excited, and we hope that you follow us on
Instagram, True Print for Life, YouTube channel, also True Print for Life. And make sure that you share, like, watch our videos. Make sure that you follow us on all streaming platforms.